Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on the household finances of the average family. You might recall back in May, we had a look at how the average family was doing with higher mortgage costs, higher petrol prices and higher food prices. We found that the average household, which in New Zealand earns about $72,000 a year, with 2 kids and a mortgage of $170,000, would have been $15 a week in the red in May. And that was much worse, about $35 a week worse than that same family would have been in 2004. So over that 4-year period, high mortgage costs and petrol costs and food costs had really eaten into the household budget and helped explain what was going on in the economy. Well, we've recalculated those numbers because obviously there have been some changes since May. We have seen the government change the tax system, albeit slightly. We've seen petrol prices fall as the oil price has fallen. We've seen mortgage rates fall as the economy has slowed and the Reserve Bank has cut interest rates. So we've recalculated the numbers and we've found that that same average family, the 2 kids, the $72,000 a year in income and the $170,000 mortgage, they are now back in the black to the tune of $45 a week. So we've seen a turnaround in that period, about 4 months, of $60 a week. About $33 a week of that came from the tax cuts announced by Michael Cullen in the last budget. And also there were some changes to working for families, and now that same family gets a tax rebate of $63 a week. Without that tax rebate, that family would be in the red still. Also, a big contribution to the improvement came from lower mortgage rates. Just $4 a week came from petrol prices. But of course, if you'd elected to take up KiwiSaver, you'd still be in the red. I'm Bernard Hickey with a bit of a calculation on average household finances in the last few months.